Hello, everybody. Jim Malone coming to you live on Dallas Trade Floor. Well, we missed the follow-through day today. So, golly, I was hoping for a follow-through day. What a follow-through day is really is it's basically 4 up days in a row on 2 or more of the major indexes, and unfortunately, that is not the case. I mean, what happened today, unfortunately, is that the market closed lower, and housing and economic data just not looking good. Of course, there's a lot of it is to do with inflation, and so not all the stocks dropped. The oil stocks, of course, are doing well because of inflation, but it just wasn't what we were hoping for, unfortunately. One thing that did happen was that we did see a rise in the we did see a rise in the federal funds here, and that has been a issue. I mean, now what basically happened, of course, is that the Dow Jones futures, the yields on the treasuries went to 14-year highs. Now, what I'm showing you here on the screen is is the chart for the TBT. This is a ETF that follows the interest rates hike. As you can see, it's just moved right on up here. Basically on up, and it's moving. It's moving higher. So, unfortunately, we're in a situation where it's just looking like we're going to see some higher interest rates continuing, and there's not a lot you can do about it. And so that's going to probably kill the new housing market somewhat. Not a good thing, but it's just good things we've got to deal with. With the market. All right, I want to show you something that's kind of interesting, at least it is to me, and that is what I'm talking about in the way the way I work here. And this is CanSlim. This is a technique that was developed by William O'Neill, basically, about 30 years ago, 30, 40 years ago. Very interesting thing. I'm an active CanSlim. I'm an active CanSlim participant here. And basically, what happens with CanSlim is it's a methodology for buying and when to buy stocks. So very, very interesting. Now, one thing I want to cover today is the kind of what happens with your portfolio. Right now, I'm mostly in cash, and I have most of my positions are in cash. But when we get a follow-through day, and that's what I've been harping on here, when we get a follow-through day, hopefully, then we're going to see some more. We're going to see the time to come. The time will be ripe to the time will be right for putting your portfolio to work. And the way the portfolio works in CanSlim is basically you should never have more than 8 to 10 stocks in your portfolio at any one time. You just shouldn't. You need a little bit. You need concentration. So don't buy 20. When it starts to turn in the upward, when the market starts to turn upward, don't buy 25 stocks. Stick with 8 to 10. And basically, when I'm talking about full positions and half positions and all that, basically this is kind of the way it works. It kind of looks like a pizza slice. Kind of looks like a pizza chart. And in this chart, basically, this kind of represents your portfolio. And in your portfolio, basically, you should try to come into a position usually at a quarter or a half position, and then a full position eventually. Now, if you're it's really moving, then you can go to 2 positions. But you should never overstress your portfolio. The way a lot of people get hurt is they'll come in really strong in a position, like they'll come in with 100 or 300 or 400 shares, and then the stock will drop it 8%, 10%, and they're really down because half the portfolio is in that. So try to keep each stock, try to keep it at about, and I like to do an eighth of my portfolio. So if my portfolio, for instance, is worth $8,000, I'm only in basically I'm I have 8 positions, each worth 1,000. And because I hold my stop losses, I always put in a stop loss typically at about 8%. The maximum I can lose on any one position going into an issue is essentially 1%. Why? Because 8% of one position, and then you get the picture. So if you lose it, let's say you lose a tenth of a tenth of the value of your stock, that's only gonna amount to a little bit about 1% on the overall portfolio. So that's one of the ways you can manage your positions. And I just want to put that out there for everyone because I think it is important to kind of know that now when we're coming into some of the stocks that we will see a time when we can really employ this. So right now, right now in my situation, let's go to let's kind of show you what I have currently in the market. Very little exposure in the market right now. Basically only 3 stocks, and I just started going into these positions. So as you can see, we're up. ExxonMobil, we're up a little bit. We're up on this other stock, AEHR. This is a semiconductor company that I like a lot. And then we're also up on, we just started this one today, Iridium. It's a satellite company. But I'm overall, I'm very lightly exposed to this market. And I think that's, you really got to be that way until we hit, until we hit the, until we hit an uptrend. And currently, the stocks that I'm in, let's give up that little bit better there. Basically, just ExxonMobil, we're up on that one. We haven't held it that long. AEHR Test Systems, and then Iridium Communications. Now, I have a full position on Iridium and a half position on each Exxon and AEHR. So that kind of puts it into perspective a little bit for some of those positions that I have. So really, when we come into the market, it's going to be critical that we really keep a close eye on our position sizing. And but right now, this is what I'm currently in the market with: ExxonMobil, AEHR, and Iridium. So that kind of gives you kind of a look-see on that. All right. So we did have some great questions here first. So let's go to those. And yeah, let's see if I got that right. Okay. All right. Let's move up here to the questions. Thank you very much. Actually, the first question that I have today, I have to switch this around there. There we go. The first question I have today is actually from one of our one of the people that's in the Discord room, and that is about the company Supermicro, SMCI. And I want to analyze this stock. I don't know if it's ready to buy yet, but I want to take a look at it just to see kind of where it's at. Now this is Supermicro. Let's see if I can put that in. Oops, I turned off. And what I'm doing is I'm switching over to the chart here on Supermicro. There we go. All right, so now we're looking at Supermicro at the at the chart on Supermicro. Basically, what's happening here is we're still in this downward trend, of course, on Supermicro. We did close today at 55. 59. Now, what's happening? I don't know what's happening after hours, but it's an awful lot of. It's a huge swing, 17%. My guess is here, and it's just a guess, is that there's some news, possibly an acquisition or something like that. I want to go over and I want to take a look quickly at what the weekly chart says and see if there was earnings today or not. June, I don't think there was earnings, so I'm looking at the earnings chart here. There just was this huge bump. I have no idea why that's the case, but sometimes we get false positives on on issues because the feeds into the charts aren't correct. But I don't see anything really unusual. Actually, I see lower than normal volume. But let's kind of check the checklist here. 399 funds are in it. On the technicals, we're basically, we're 13%, wow, above the 40-week line. Let's see how close the checklist is very good on this one. On the pattern recognition, yeah, we're below the pivot, so that's interesting. I can't tell you why. I can't tell you why offhand this one is. I can't tell you why offhand this one is has that kind of amount of a bounce after hours. So I'm really a little bit confused there, but who knows? I mean, so I've definitely been confused before. So with super micro, there may have been an external event, but I think that this may just be a glitch in the software. We'll see tomorrow, but thank you very, very much for that question. And let's get to some more questions here from the people on YouTube. All right, let's take the first one here. Hello, whenever the follow-through day comes, what ETF do you think would be the best to invest in if you're using an ETF strategy? That is a great question. By the way, we have an ETF. There's Investor Business Daily uses what they call an ETF strategy. And what this basically is, just in a nutshell, is if you don't really want to be picking stocks and doing that kind of thing, you basically trade exclusively on the indexes. And you pick an index fund, typically it's the QQQ or the SPDR, the SPY. And then when you get a follow-through day, you go all into that. Now, of course, we're talking about your position sizing and all that, and that really has to do more with stocks. If you're going to trade, if you're not just going to trade index funds, the way to do it is with the ETF strategy, and that's basically kind of like a red light, green light strategy. So when we get a confirmed uptrend, which happens on a follow-through day, you take 100% and you go into that ETF. Now, I'd recommend the QQQ for that. Now, if we go from a confirmed uptrend to an uptrend under pressure, that would be kind of like yellow light. You want to sell half of that position and put half of it in cash. And if we come into a downtrend in a correction like we are now, you want to be out and you want to be in cash. Now, that's part of the reason I've been so much in cash is because I've been waiting for this follow-through day to come into the market. I've been nibbling. I've been putting a little toe in the market, but nothing serious. We have been in a downtrend. So let's take a look just real quick at the QQQ and kind of look at when we might see an opportunity to get back into the market. So here I am with the QQQ chart. I'm just gonna put it up there. Now, right now, as of today, we are in a downtrend. Okay, we are in a downtrend. Now, if you look carefully at the title slide of that I put up every time, you will notice, and if we can do that really quickly, you will notice a little red here, and there's three colors. There's red, green, and yellow. Now, if it's a red, that means we're in a correction. So you want to be, you don't want to be in the ETF. You only want to be in the ETF. You want to be in the all in cash when you see a red there. Now, when it moves to, let's say we move to a confirmed uptrend and this little ball goes green, that means you want to go 100% in. Also, when it's pulling back, when you go into an uptrend and correction, it'll be yellow. You want to sell half of your position, for instance, in the QQQ. And I think that's really the best one to do because that really represents growth stocks. When you would sell half if it's a yellow here, and that would be for the confirmed uptrend. Market is in, I'm sorry, uptrend under pressure. So there's three colors. There's red, which is all out of the market, yellow, which is 50% in the market, 50% out, and then green, which is 100% out. And if you're following the ETF strategy, you would use an ETF such as the QQQ. And this is the QQQ here. Right now, unfortunately, with the QQQ, we're still at a place where it's struggling. It came up today to the 21-day line, but it's still, unfortunately, in a downtrend. So we want to be 100% in cash here. We want to be, if we're following the ETF strategy, we want to be 100% in cash. Why? Because unfortunately, the market is in a downtrend. Now, the QQQ, which is the ETF that covers the one I like to use, it covers the 100 largest stocks in the NASDAQ technology. The reason why we've been having so much trouble here is because as the interest rates go up on the long bonds, that was what I was showing you before. The reason, as it goes up on the long bonds, unfortunately, that hurts the growth of growth stocks, because growth stocks typically don't have earnings in the current period. All they have is sales and sales growth. They don't really have earnings. In the market that we're in now, in a high inflation market, the market that is being favored is the S&P 500 and the Dow. Specifically, the Dow is being favored right now. So this market environment, if we want to do the ETF, you could possibly do it with the QQQ, like I showed you here, or, I know this is a very long answer, or you could go to the Diamond. That's the DIA. And that one probably it'll be less volatile than we have in the QQQ, and it will move up. In this sort of market, this will move up stronger as well. But problem here again is that we're in a confirmed downtrend. So if you're following the ETF strategy right now, unfortunately, you can't use it because you have to be in cash. So that's kind of my long and short. Thank you so much for that, Fernando. I really appreciate that question. I'm going to try to put out more information on how to use this. But remember, I always post the direction of the market. If you go to the title page on the screen on the YouTube, you will see a little circle there, and that is showing the market direction. Right now, we're in a market incorrection, so you want to be all out of the ETF that you are using for the ETF strategy. So that's the answer for that. Thank you very much. All right, let's see. Oh, thank you very much. Good to see you as well, and thank you for watching. I'm amazed that people actually watch, but thank you very, very much for that question. That's a great question. All right, let's look at the spider for Christina. And that, of course, is a very important. That's a very important ETF, and the reason it's so important is that ETF covers basically the S&P 500, which is the majority of the stocks. It's 500 stocks. The 500 largest stocks that are traded on the New York Stock Exchange is included in the S&P. So it includes a lot of banks and oil companies, and there's a lot of things that the S&P 500 covers. The spider is the ETF, that index ETF that covers that. So let's take a look at the spider as we speak. So here we're going to go. I'm going to go over here to the spider, SPY, and let's see if I can get that up on the screen. Getting better at these controls. I'm still not perfect, not even close. But here's basically the spider, and what the spider is telling us, and what the spider is telling us here is we're still in this downward trend. Ouch! Again, this is one of the other major indexes. What I was hoping for is a change in market direction, and that is indicated by what they call a follow-through day. The follow-through day is based on three indexes: the S&P 500, the Nasdaq, and the Dow Jones. Now, there are three ETFs that cover these. The DIA, that's the diamond, covers the Dow Jones. That's only 30 stocks. Then there's the S&P 500, which is represented by the ETF SPY, Spider. The third one is the NASDAQ 100, which is represented by the QQQ. Now, unfortunately, we had a down day here, unfortunately, on the on the Spider, and that was unfortunate because that probably would have given us potential for a follow-through day. Let's also look at the QQQ, and then let me look at the diamond here really quickly, because these are the three indexes that we really follow more than any of the others. We really follow these indexes. This here is the diamond, and basically what happened, there was a little bit of an upward trend, and we're doing great until yesterday. We hit that 21-day line, and boom, we came right back. That's why I'm always talking about this 21-day line. That's the green line here. I'm always talking about that because that is major resistance. So unfortunately, we are 0 for 2. Let's see if we can find out with the third index. The third index, of course, that we're talking about is the diamond, and that's the symbol on that one is DIA, and it covers the Dow Jones index. So I'm gonna look at that one real quick as well. Uh-oh, that's something wrong there. Pull that over. There we go. Hopefully we can see it. This is the Dow Jones ETF called the Diamond, and this one, we look at it today, this was down as well. But look here, the diamond is above the 21-day moving average. Now, that's why I was saying, if you're looking for an ETF that probably most resembles this market, at least for right now, it's probably going to be the diamond, because the diamond is outperforming the two other indexes, the S&P 500 and the NASDAQ. So this one also pulled back. So unfortunately, we're 0 for 3 today in terms of the indexes, and that is not a great thing. So here's the thing: at least what we're seeing here is, we are trying to, we're trying to break through we're trying to break through, but we've had a little bit of headway once again. And Hans basically is saying, and what is the situation here? What is the situation with that? Are we headed lower here? Well, I think that I don't think we're really headed lower. At least that's not what I'm seeing. But what I'm seeing sort of falling. What I'm seeing is sort of, the indexes are not, we're not breaking through. We're not breaking through. So I think we may have some more sideways action. Unfortunately, I was hoping that we're going to get a fall through day, but we didn't, and that's just the way of the world. So I think we're going sideways right now. I don't think many of the stocks are bottoming. That's one of the reasons why looking at stuff like Netflix is so important, because I do think that Netflix is getting some support. It's off like 70% off of where it was. And remember, that was a FANG stock. That was a named in FANG. It was Facebook. It's a double chip. And so I'm thinking some of those are bottoming. Now, I'm not a good bottom fisher. I'll be honest with you. I'm not the greatest. I like to get the stock when it's in the upward trend. And right now, just hasn't been the upward trend. I've been trying to buy, but it's been tough because the market is an overall downward trend right now, and we haven't broken to the upside. I'm kind of waiting. I'm hoping for that. That's what the follow through day indicates. So to answer your question and not beat around the bush, unfortunately, yeah, I think we are in a downward trend. I think we are in a downward trend right now, and you just have to stay mostly in cash. That's the best way to handle the situation right now, is to stay mostly in cash. Now, it's true, I've made some buys, so I'm not totally. I'm probing out there to see kind of where we're going with that. I mean, I do have 3 stocks currently, and they're all up, which is amazing. But it's only because they're sort of bucking the trend. They're the strongest. Now, when we get a reversal to the upside, not necessarily follow through, we get a confirmed uptrend, we are going to see which stocks now become the strongest. And I'm suspecting that many of the stocks that are going to be the strongest in this next move upward are going to be somehow related to semiconductors. And why? Because that seems to be the supply chain of, that is being changed. I mean, it's moving out of Taiwan, it's moving back to Europe and the US. And so there's a lot of spend on semiconductors right now. And there's companies like AEHR, which I own, that are potentially going to benefit from this. But again, I just put little tiny positions. I'm not going all in on these, not even close. So unfortunately, right now, the best position probably until we get that follow through day is cash, and kind of disappointing all the way around. But that's what you can, that's what you have to look. All right. When buying at a pivot point, this is great. By the way, this is totally canceling. Thank you for asking this question. It seems like, and by the way, if you don't understand what I'm talking about and you want to get more information, just go to Amazon or the website, the www Dallas Trading Floor. Just go to the website and order the book, How to Make Money in Stocks and Winning System, Good Times or Bad. It'll explain this. And this is based on literally years and years and years of study of the market. So very highly recommended by William O'Neill, the founder of Investor Business Daily. Anyways, a little plug for that. When buying at the pivot point, do you wait for the stock to close above that level? Thanks. That is in a strongly upward trending market. That is the best way to do it. But we are in a situation now where we have to buy below the pivot, as it's making its move higher. And let me just show you that on a stock that you might be interested in. This is AEHR. This is the company that I was talking about. AEHR, and I want to show you how I bought that one. All right, so if we go over here to the chart, we can see on the daily chart that there are two peaks. See right there, that and that one. If we draw a line, we'll notice this is what they call a reversal line. Okay, and you draw this yourself, and that means below this line, the stock is in a downward trend. Above this line, the stock has changed to an upward trend. But here's the thing: typically, when it changes to an upward trend, it will move upwards until it gets to the pivot. And then if it moves through the pivot, it will continue up. That's typically the way. It has to be typically on higher volume. So here's the thing when you're buying this, and this is much more of an art and much less of a science. But as it moves up in higher volume, you notice how this is higher volume here? See these blue spikes? This red right here is the average, okay? So this is very much above average. And also look at this scale. This is a logarithmic scale. So actually, this is a lot of buying action here. And that's when it kind of reversed. See how when it reversed, it started to gap up there? Next one, okay, there's still some interest in it. It's moving higher, and it moved right up to the pivot. You notice that little cross, that little dagger there? Well, it moved right up to the pivot, and then it was rejected. Why? Well, because the pivot is where the new high happens. Notice that the prior high here was about 1943, and if we can move through that, of course, that's going to show more power. Now, normally in a normal market, which isn't sort of downward trending, you would buy above the pivot. That would be the better place to buy. But because we are in such a crappy market, we have to buy it deep. We have to buy it deep into the revert. We have to buy it deep. So typically, what we're doing is we're looking for it to it's called buying on the reversal. It'll pull back to the index lines. These are the moving averages, the 10-day and the 21-day. And then when it kind of gets a little bit of support there, then it'll start to move up if there's interest in the stock. So we're trying to buy as it pivots up, and then if it moves past the pivot point, then we probably want to add to our position. So typically, the way I do it is I go in with a half position or a quarter position on when it reverses. Then at the pivot, I'm buying another quarter or half position, and then I'm basically letting it come up about 10%, 5 to 10%, and then I'm taking profits right about there. And a lot of times this is early to take profits. If we were in a better market, I just hold it. But in this kind of market, that's what we're doing. We're essentially doing a what they call this is a trend. We're trend trading here, and this is really what they call a swing trade. So when it swings up, we're trying to buy it, add, and then get rid of it as it moves up. So I hope that wasn't too complicated. But remember, this is much more of an art. This is not a science. This is an art. So it's not. It just takes practice. But that's in the nutshell, kind of what I'm looking at. So great. Thank you very, very much for that question. Really appreciate it. All right. So Hans basically is asking, Jim, do you think Tesla will go below 200? Swing traded Tesla, bought at a 210. Good for you, and sold before hitting 220. That's very, very good. Made a little profit. Okay, well, you see, that's how you do it. That you're being very smart there, Hans. Very smart, because that's what we're doing. In this market isn't giving us huge swings. It's just because things are trading sideways, things are trading in a range, but you can still make money if you swing trade like that. And you did great. But I think that it is likely to stay within that trading range. And there's a lot of reasons I believe that Tesla is, because it's just becoming, it was a terrific stock before, and now it's just kind of becoming really kind of a market perform stock, kind of a stock that, it's there, it's great, but it isn't really making any headway. So basically, on this chart, you can see, and you're definitely right by saying 200. There's a consolidation. Look at this. It's come down and it's hit this and it's moved up. Come down and hit this, moved up. Come down. So 200 is sort of the floor. Now the ceiling is about 400. So we've got about 200. We've got about 200 points between there and there. So we can definitely we can make money on Tesla by trading the swings. If you notice, it's come down, it's bounced, and they come up. So I definitely think there's support at 200. I mean the chart shows it. It's not. I'm not thinking on this. The chart shows support for Tesla at 200. Now, if it comes down and it breaks through there and it doesn't bounce, that's where you got to watch out. If it goes down to about 190 and then you get up the next morning and it's continuing down, sell, because it's broken through that resistance. But there's support right at 200. And I don't think it's going to go down below that anytime soon. Here's one thing I do look at a lot is what they call the stochastic indicator. And this shows momentum. And I want to show you the momentum on Tesla. You see how it came down? Now, at the top of this stochastic indicator is an overbought condition, and at the bottom of it, it's got oversold condition. Now, you want to buy it as it's moving, as the stochastic indicator typically is moving up from an overbought position to an oversold position, and that's exactly what's happening here with Tesla. So my guess is we're going to see, no matter what the market does overall, we're going to see a little bit of a movement to the upside on Tesla in the next few days. Why? Because the momentum, the stochastic indicator, is showing that the momentum is moving from an overbought position to potentially an oversold position. So interesting. And I do think that is definitely going to be the case for Tesla. But remember, Tesla is not the stock it was a year or two ago. It is a market perform stock, meaning that really it's only performing at the market. So don't look, swing trade it, but don't, it's not like, going to the moon like it. See, in 2020, Tesla, between 2020 and 2021, Tesla appreciated tenfold, meaning that, if you bought it kind of where I bought it at 316, you had a tenfold increase on that. That's unlikely to happen again. I mean, typically stocks don't move like that over their whole life. They just don't continue to double and double and double. It just doesn't happen. So I think that, Tesla is a market perform stock, but you're definitely right. I do think that there's a floor on Tesla at about 200. So it's definitely tradable. So fantastic. All right, we kind of went over Tesla here. Let's go over Apple. Now, remember, Apple is an extremely important stock in terms of the NASDAQ index, which is represented by the ETF, the QQQ. And by the way, it's also the #1 holding currently of Berkshire Hathaway. So if you buy Berkshire Hathaway, you basically get Apple. Because it's their #1 holding, which is very interesting. So let's take a look at Apple. Let me move over to that chart. AAPL, of course, is the symbol for this one. And let's kind of look at it with regards to, to sort of how it's behaving. Now I have a stochastic indicator up here. We've seen Apple has been in what they call an overbought, oversold, an oversold position, and it looks like it's starting to move up, which is good. I mean, in this indicator, basically, you want to look at 20 and 80. That's going to kind of give you. Remember, this is the 80-20 rule. Remember that from college. You want to look at it in the zone. So it's starting its move to an oversold position, but right now it's making its move to an overbought position from an oversold position. So I definitely think we're going to potentially see Apple move up in the next few days. This is one of the reasons why I'm waiting for that follow through day, because I do think that I'm seeing in a lot of these stocks, I'm seeing that we're moving from this overbought to this oversold situation, and I do think we're going to see some upward pressure. So hopefully, but the market is so weak. Every time we push up, we get this interest rate rise, and it just whacks the market. So tough market to trade. So I do think that we are going to see Apple move up if there's no other forces on it, at least for right now. Now the question is, how much is it going to move up? Is it swing tradable? I don't know if that's a word or not. I don't think it is. I don't think swing tradable is a word. But let's take a look at Apple here again, and there we go. Okay, so here's the chart for Apple, and should I make sure that I'm showing that? Yeah, I am. Great, I'm showing it. We're moving up, and the consolidation, the bottom of the consolidation for Apple is down here. So it's about 129. That's sort of where the floor is. For the ceiling, and it's really up there, is approximately, it's approximately 185 or 180 right there. See, so we're way down. We're way down in the trend. It's come down. It's going to oscillate up. Seems like it's getting a little bit of support here and moving up. But here's the problem, and this is in such a weak market. We're coming to the 21-day line. This is a green line, and it's getting rejected. So there's definitely resistance in moving above about 143. Notice how in the after hours it's down. So I think that we can just see it kind of again try to make it above that 21-day line, and then go higher. If we draw a reversal line, we're looking at it's coming. Apple is moving from a downward trend just into an upward trend, but this market is so weak that I wouldn't trust it at this level. I would wait until it came up a little bit more. So that's kind of my long and short on Apple. All right, one more question. I'm kind of running long today. I really appreciate all these great questions, and that is about Intel. What's going on with Intel? Now, one of the things that we have going for us with Intel is that there's a huge amount of money that is being invested by the government, by the federal government, in um, in Intel, because it's so critical to the infrastructure that it's so critical to the chip infrastructure really of the world. So what I'm doing here is I'm kind of concentrating on the sales that's happening in Intel. Now, their sales have been going up, but it's been pretty weak. The last quarter, Intel only increased sales by 2%. And this is the problem number for Intel. Intel's profit was down 6% quarter over quarter. So unfortunately, Apple is in the hospital. It's not producing the kind of profits that it needs. Now, if we go up and we look at the projections, and by the way, what I'm doing here, this is called fundamental analysis. When I'm looking at the chart, that is technical analysis. But here we go at the anticipation for this quarter. The anticipation is we're going to have about a 9% bump in profit. So we're still holding that we're going to go up a little bit, but this is pretty anemic. So really, don't expect a lot of growth in Intel until it's probably going to peak at the end of this year, and then next year doesn't look very good either. The projections are a 5% decline in profits next year. So not really the greatest news for Intel. So that was the kind of doing what you would call the fundamental analysis. Now let's look at the technical action on Intel, because I think that's really important in terms of where we're at there. All right, we're seeing the same pattern that we're seeing with Apple, and that is we're seeing it trying to make this reversal. But what's happening is you notice how it's coming right up to the line, and then it can't make any more movement. So again, I wouldn't be a buyer of Apple here. I mean, I wouldn't be a buyer of I'm sorry, looking at Apple. That's the wrong thing to look at. Let's look at Intel. I did say, excuse me, giving you the wrong information, wrong chart. Okay. The chart for Intel is much more severe, as you can see. This is the reversal line for Intel. Notice how it's well below that line. That means that we're still in a downward trend on Intel. Now, I wouldn't probably be a buyer of Intel here. Why? Because it hasn't reversed higher. Now, if we get good news, and let's look at I want to look again at the fundamentals here on Intel. Yeah, it's just unfortunate that we're getting these kind of. It's unfortunate we're getting these kind of numbers here. And sales were off 22%. Profits were down 79%. Unless Intel looks like it's going to continue lower. I hate to say that, but it does look like it's going to continue lower. It has a very low PE ratio of 7, which is amazing. If you could buy a company that good, Intel, for 7. Now, I do think they're going to turn it around based on their numbers here. They're saying that their profits are going to be down 60%. I mean, they're 60%, but they're looking at next year at possibly a gain of 14%. So unfortunately, I have to say no on Intel. I just don't think it's bottomed yet, and I think we've got to wait. I think I would love to buy this stock at the bottom. I'm not, as I say again, I'm not great at buying at the bottom, but with the way this chart is looking, I don't think we're anywhere near the bottom. I think this could be a $20 stock, and if it is, I'm probably buying it. So that's that. Okay, last question, and it's from Byron. I know investors don't like the overwhelming investment they made on chip fab infrastructure. I know they don't like making the big investment either, but I do think that as we move to the new silicon carbide chips, there's going to be investment, and I think the companies that are supplying, not the chip companies, but the companies that are supplying the test equipment, they're going to benefit, and that's why I'm looking at AEHR, and possibly Wolf Speed. That's another one, WOLF. I'm not buying that one because the chart doesn't look good, but I do think there's going to be at least a little bit of green sprouts in those things. So that's kind of my take on it. Wow, the time goes so fast. If you're not already a member of the Action Trade Alerts, please join our club, and it's free. All you have to do is go to www.DallasTradingFloor and sign up for that, first and last name and an email address, and you know, I'll send you all my stuff. And by the way, you can unsubscribe anytime if it gets boring. So we're best. I'll be back at 5 o'clock tomorrow. Tomorrow, I think that's Friday. Yeah. And when I back tomorrow, hopefully we're going to talk about kind of watch lists and what I'm looking at in terms of things that when we get a follow through day that I'm looking to buy. So I'm going to go through that, and I also want to put out that to a lot of other people. By the way, if you haven't already liked this show, please like it because it helps me an awful lot. So smash that like button. Also subscribe too if you're looking, if you're on the YouTube, and of course like me if you're looking on TikTok. And by the way, if you want to see everything, you can see it on YouTube right after the show. It's put up there and it's available in about 5 minutes. Easy to get to. YouTube.com/Dallas Trading Floor, and you'll be able to see the show there. So until tomorrow, thanks everybody. Happy trading.